Are you living outside the UK but still have income coming from here? Maybe it's a rental property in Manchester, a UK pension, or clients you're working with from abroad. If that sounds like you, then you've probably asked yourself, am I paying the right amount of UK tax? It's a massive question, and getting it wrong just isn't an option.
Honestly, trying to figure out your UK tax obligations from another country can feel like you're trying to solve a puzzle in the dark. The rules are different, the forms can be completely baffling, and it's so easy to feel overwhelmed. But that's exactly why we've put this guide together, to switch the lights on and give you a clear path forward for the 2025/26 tax year. And to make sure you're getting the most accurate, up-to-the-minute information, this entire breakdown has been put together by the experts at My Tax Accountant. Look, they live and breathe this stuff every single day, so you are in very, very capable hands. Right, let's get you the clarity you came here for.
We've laid this out to be as straightforward as possible. We'll kick off with the absolute cornerstone. Are you even a UK resident for tax purposes? From there, we'll dive into your income tax, property tax, the huge shakeup coming to inheritance tax, and finally, the practical steps you actually need to take.
Okay, Section 1. Seriously, everything, and I mean everything, hinges on this first step. Your tax residency status is the bedrock of your UK tax obligations. If you get this bit wrong, every other calculation you make could be incorrect. So how does HMRC figure it out? Well, they use a formal framework called the Statutory Residence Test, or SRT for short. This isn't about your nationality or where you feel your home is. It's a really specific three-part test that gives a black and white answer for each tax year.
The SRT works like a logical three-stage filter. First, HMRC checks if you're automatically a non-resident. If you are, great, job done. You stop right there. If you're not, it moves to stage 2. Are you automatically a UK resident? And only if your status still isn't crystal clear after all that do we move to the final test, which weighs up all your connections to the UK.
And this is that final, crucial test. This table really shows the balancing act, especially for people who've recently left the UK. You can see that the more days you spend here, the fewer connections, like having family, a home, or work here, you need to be considered a resident for tax. Spend over 4 months in the UK, and just one of those ties could be enough to tip the scales. It's a really common trap.
So let's say you've gone through the tests and confirmed you are a non-resident. What's next? Well, that brings us to Section 2, where we'll break down exactly what UK income is taxable, and just as importantly, what might not be.
The big number you need to remember for this tax year is £12,570. That's the standard UK personal allowance, which is simply the amount of UK income you can earn before you have to pay a single penny of tax. So let's imagine Anna, a freelance designer living out in Spain. If she earns, say, £10,000 from UK clients, this allowance could mean she pays zero UK tax. But, and this is a big but, not everyone automatically gets it.
And this is a key point that trips so many people up. Getting that tax-free allowance isn't a given. It usually depends on your passport or the country you live in. So, UK and European Economic Area citizens generally qualify, as do residents of countries that have specific double taxation agreements in place with the UK.
Okay, here's a pro tip that could genuinely save you some cash. For non-residents, some income is what we call disregarded. Think of it this way. Let's say you get UK dividends. Even if your other UK income pushes you into a higher tax bracket, the tax on those dividends is capped. It won't get dragged up into that higher rate. It's a really powerful but often overlooked rule. Right, let's move on to one of the biggest topics for non-residents, property. If you own, are thinking of buying, or are planning to sell property in the UK, this section is absolutely essential. Stay with me. Understanding this next part could save you thousands. When you're buying property, the costs can really escalate. Non-residents face an extra 2% stamp duty surcharge, which is basically bolted on top of any other rates you have to pay. The impact is huge. For instance, if you're buying an additional property worth £300,000, you're suddenly looking at a total stamp duty rate of 12%. That's a major upfront cost you have to factor into your budget.
But what about when you sell? That's when capital gains tax, or CGT, comes into play. And the rule is simple. Non-residents have to pay UK CGT on any profit they make from selling UK property. So, when our freelance designer Anna sells her London flat, how exactly does HMRC work out her tax bill?
It's a pretty clear 4-step process. First, Anna works out her total gain. That's the sale price minus what she originally paid plus her costs. Second, she deducts any relief she's eligible for.
Third, she can knock off the annual CGT exemption, which for this tax year is £3,000. And then finally, she pays capital gains tax on whatever profit is left.
Now pay very close attention to this next bit. This is a critical deadline that catches so many people out. You have just 60 days from the date you complete the sale to report it to HMRC and pay an estimate of the tax you owe. If you miss that 2-month window, you're looking at automatic penalties. It's a non-negotiable deadline.
All right, let's pivot to a really significant development. From April 2025, the rules around UK inheritance tax are being completely overhauled. So if you've lived in the UK for a number of years or you have assets here, this is a vital update for your long-term planning.
So what's actually changing? Well, the entire foundation of the system. For decades, it was based on this notoriously complex idea called domicile. The new system scraps that completely and moves to a much clearer residence-based test. So it's no longer about where your family has historic ties, but simply about how long you have lived in the UK. For some people, this will make planning easier, but for others, it might unexpectedly bring their entire global estate into the UK tax net.
And here is the magic number you need to remember: 10 years. Under these new rules, once you've been a UK resident for 10 years, your entire worldwide estate could be subject to UK inheritance tax. Just think about what that means. Someone who worked in the UK for 11 years and then retired abroad could suddenly find their assets in another country facing a 40% UK tax charge. It's a monumental shift.
Okay, we've covered the rules and the reasons, so let's finish up with the how. Section 5 is all about the practical steps, what you actually need to do to report your income and gains to HMRC and stay fully compliant.
The two forms you'll most likely bump into are the SA-109 and the R-43. The SA-109 is the key bit you add to your main tax return, and it's where you formally declare your resident status. You'd also use this if you're claiming split-year treatment. That's a special rule for the year you either leave or arrive in the UK. On the other hand, if you don't need to file a full tax return, but you think you're due a refund, then Form R-43 is the one you'll need.
And that brings us to our final section, pulling it all together. Let's quickly recap the key takeaways and talk about where you can get the professional help you need to navigate all of this with total confidence.
But before we wrap up, it is absolutely essential to be clear about this. The information we've covered today is for general guidance only. Your own tax situation is completely unique. So please, don't see this as a substitute for professional, tailored advice from an expert who really understands your specific circumstances. So where can you get that expert help? The team at My Tax Accountant who developed this guide are the people to speak to. You can call them on 0208-570-8531, or you can email them at info@mytaxaccountant.co.uk. For a much deeper dive into everything we've talked about, you can read their full article on their blog. And of course, for more updates just like this one, make sure you subscribe to their YouTube channel. Look, navigating UK tax from abroad can be a challenge, but with the right guidance, you can be totally confident that you're getting it right. Thanks for joining us.